All right. Okay, we're back. Welcome back, everyone. Welcome back. Ed Ponsi here, your FX educator, here on behalf of FX Street once again. And it's good to be home. It's good to be back. I hope everybody had a wonderful weekend. We've had lovely weather here on the East Coast, and I hope everybody has good weather and good times wherever you are. Got to see some wonderful sights on the weekend. Just out. Went to some places I'd never been before in the middle of nowhere. You know, sometimes it's fun. And while I was waiting for the wife to get some things done that she had to get done, went to see some places I'd never been in the middle of nowhere, and it was kind of fun. So anyway, you just never know. Random stuff, right? Anyway, just taking a peek here at our economic calendar for the day. The day ahead. Oh, well, what we've already seen past us, there has not been a tremendous important stuff. But the main thing here, Euro. In Germany, industrial production, these numbers were really bad for industrial production. And now, according to this calendar, this is not important. I say it is important because it's Germany. Think about it. Right, Germany. When I think about Germany, I think about exports. Right, Germany is a huge exporter, one of the biggest in the world. Right, and what do they export? They export things that are made in factories. So if you're Germany, your industrial production starts falling unexpectedly. That's potentially a problem. Of course, it's just for the month of June. Right, it's just for the month of June. We were expecting a 0.2 increase. We get a 1.1% decrease. Anyone could have one bad month. It doesn't mean that the whole thing is going down the tubes, but it's worth keeping an eye on, isn't it? Right? We have to keep an eye on it. So there you have it. Right, that's your industrial production figure for Germany. That might be the most important detail there. My friends in the UK, your Halifax housing prices went up. Right, so there you go. That's something you can hang your hat on there. But again, it's just 1 month. It's probably not that big of a deal. I don't think anyone's terribly worried about consumer prices in Switzerland, which dropped 0.3% for the month of July, but that was expected, right? And that's where we stand, right? That's pretty much it as far as everything that went by. And then there's nothing coming up really of all that much importance. We've got some Treasury auctions and some Fed speakers, and we do have a retail sales figure coming up in about 10 hours out of the UK, but it's nothing much to worry about. We have an OPEC meeting underway for the week, and that's something that, listen, if I'm OPEC, I'm going to create it certainly seems as if OPEC is very, very aware of how markets work, and it certainly seems as if they toy with the markets a bit. Wouldn't you think that sometimes they create the impression that they say something that almost seems designed to make markets rise, and then they say something that seems designed to make markets fall, knowing that in advance that it's listen, if they know if we say X that the market's going to rise, do you think they're buying calls ahead of time? And then once the markets rise, they sell the calls and buy puts, and then they say something that makes the markets fall. Would it be so much of a surprise if something like that was happening? I wouldn't be terribly surprised. Lots of data coming out of China tomorrow. We'll worry about that. Overnight, rather. Lots of data coming out of China overnight. Which currency would I be concerned about? I would be concerned about Australian dollar if I were looking at all this information coming out of China. And it is important, especially China trade balance. Imports and exports will move Australian dollar, almost certainly. Everybody keeps a close eye on these figures. out of China to see how healthy China is. And we look at China exports to see not only how well China is doing, but how well the rest of the world is doing. It's demand from places like the U.S. and Europe that really tells us how the global economy is doing in a way. So you can learn an awful lot by looking at these China figures that'll be coming out overnight. We'll talk about that tomorrow. And then, of course, we've got exports out of Germany tomorrow. Well, you know why that's important. We already discussed why that is important. Exports out of Germany expected to drop by 0.1% for the month of June. Okay. All right. So much for that. And we'll, again, there's a lot of stuff there that we can discuss tomorrow. Let's get back to the charts. And we were talking about the British pound there, which broke an important support level, broke its upward trend line. And will it continue to fall? Too early to say. I don't know. I mean, it could be oversold at this point. Let's pull out the RSI here on some different time frames and see. As far as the daily is concerned, it's just in the middle of the range, but I'm sure that if you went to the hourly, you would find an oversold reading. Pull up the 60-minute on RSI. I'm pretty certain that we'd see an oversold reading here on the hourly. Any day now, TradeStation. Come on. I guess it's Monday morning and everybody's overloading the TradeStation network here. Yeah, we are not quite oversold, but wow, are we close, right? 31.48, so we're extraordinarily close to oversold. Very, very likely we'll get an oversold reading very shortly. We had several of them recently. This one clearly did not work back on August 3rd. But that's okay. If it worked all the time, this would be too easy, wouldn't it? This one, the jury's still out. Don't know if that's going to work or not. But if the price drops a little bit more, we're going to get another oversold reading here. It looks like it's taking the stairways down, doesn't it? Like a little stair step. And but I think it's going to. You may get another opportunity here. You may get another oversold reading, and the way to take it is to allow it to become oversold, and you want a candle to close with this in the oversold territory. In other words, you'll see this turn green. You'll see this candle to close with the reading under 30. After that, you want another candle to close with the reading above 30. That's your buy signal. So a candle closes with the reading under 30 is not a buy signal. That means get ready to buy. Then the trigger to buy occurs when a candle closes above 30, after a candle closes below 30. And that would be your entry signal. So you could get an oversold buy coming up here soon on British pound. But I'm in no hurry. Should we look for overbought to short it now? Absolutely could do that. But see, I look at the trend. I don't think the trend line is broken. So it's really kind of a judgment call. Is it still in an uptrend? Some would say yes, and some would say no. That trend line is broken, and the momentum is downward. The momentum is pretty strong on the downside. So I think you could probably say, if you wanted to, yeah, you could short that on the overbought, or you could buy it on the oversold, depending on whether you consider that trend to be broken or not. I think it's really a judgment call here. It's a really good question from Carlos. You really got to use your judgment. I don't know if that's going to happen, though, to be honest with you. But wouldn't that be something? In other words, to say, all right, that trend line is broken, and very possibly series of higher lows might be broken, depending on how you slice this. Let's take a closer look. let's get inside this. I'm going to say low, high, higher low, higher high, higher low, higher high. See, this could be another higher low, but I don't know yet because it's too early. It's too early to say. I can't declare this the low because this could still fall. If it gets below, here's how I would interpret this. When I said higher low, what was I talking about specifically? The bottom of this wick. Where is the bottom of that wick specifically? Right here. Just bear with me. Let me explain. $129. My eyes are going, but I think it says 40, 43. Just a second. 34. Call it 35. 129.35. In order to do this correctly in the classic way, and I'm not saying other ways are incorrect, but the classic way of doing this would be to say, if it breaks this low, this higher low, then this becomes a lower low. If it breaks under this line, then it can't be a higher low. It has to become a lower low. But the price would have to get under 129.35 first in order to do that. Does this make sense? Otherwise, this could become another higher low. And even though this trend line is broken, then we can just redraw the trend line and the uptrend continues. That would be in the classical sense. Now, I'm okay with coloring outside the lines and doing things in a non-traditional manner. But I'm just trying to explain to you the way that the traditional way of doing things would be. If the price gets under that dotted line, there's no way that this could be a higher low. It would have to be a lower low. And therefore, at that point, short away with both barrels. But does that mean we have to play by their rules? Not necessarily. I think it's fair to take momentum into account. Okay, it's falling hard. And I said earlier, I'm in no hurry. Even if I were to get a buy signal, I'm in no hurry because of the rate at which this is falling. I wouldn't be in a big rush to get long. Weekly candle may be indicating a deeper pullback, says Carlos. Let's take a look at the weekly. It's one thing I like about Carlos. He's not afraid to go to the longer time frames. By the way, I drew up sort of the storyline here. Now 127.70 would be right about down to here. I'll tell you what, the trend line certainly looks to be in worse shape here on the weekly than it does on the daily. I don't know if that matters or not. frankly, but it certainly looks worse here. That doesn't necessarily mean downtrend or short away. We could just go into a sideways mode. But the daily, man, the downtrend looks, the downward move looks vicious on that daily. It looks like it has momentum. And I don't want to ignore that. Now, could it go down to 127.70? Absolutely. But I mean, a lot of things could happen. It could go down to 125.50. Yeah, I mean, that would mean coming all the way back down through that entire little uptrend, back down to these support areas. Could that happen? Absolutely. I mean, look, you have to have an open mind, and you know, there was a trader in Market Wizards who said, and I think it was Bruce Kovner. And if you haven't read Market Wizards, for anyone who's listening to this on the replay or live, if you haven't read Market Wizards, I highly recommend it. And I think it was Bruce Kovner. I could be wrong, but one of the Market Wizards was saying, I can consider any situation and imagine it as real, right? As really happening. And I think that's important as a trader. To imagine any situation as really happening. For you Game of Thrones fans, Littlefinger, not this week, but the week before, gave a little speech of something very similar. So I'm not going to go all Game of Thrones on you, but if you watch, you probably know he was speaking to Lady Sansa, and he gave a short speech about fighting every battle in your mind, so that no matter what situation you encounter, you've already been there. You've already encountered it. And I thought, that is trading. That's just like trading, right? So yes, this could absolutely happen. And in order for that to happen all the way back down to the 125s, this would just have to reverse all of this. Which on the weekly, you look at this on the weekly and you say, it's not that far-fetched. But what would have to occur? I think politically, and I'm not that in touch with what's going on over there politically, but maybe someone who is could update us. In order for the pound to fall that hard, are they, Richard, if you're listening right now, Richard, are they moving toward a hard Brexit over there? I think we might have because the thing I think that scares people about the British pound is when they start talking hard Brexit, meaning Great Britain just walks away from the table and ends negotiation. Is this a possibility? Richard says we are not really sure. Holidays at the moment. Because when I see the pound falling like this, and this is much more than dollar strength. Because I look at other currencies, the euro had one bad day because of non-farm payrolls. But this isn't one bad day. The pound is really getting eviscerated here. And I begin to believe, and I could have sworn I read a few things somewhere along the line about hard Brexit, about Great Britain threatening to walk away from the table, but you never know how seriously to take any of this. But hard Brexit would be the most radical outcome, and the one that is potentially the most damaging to the pound, I believe. The main euro negotiator is at the racetrack with his UK opposite, Silverstone. Okay, well that's at least they're together, right? So, and that's something, again, following from the other side of the pond here, we don't really hear as much about it over here in the U.S. So, but I have the little bit I have heard recently sounded to me that it, that there was potential, and again, everything's a negotiation, right? Everything is a negotiation. So if Great Britain threatens to walk away, it's probably just a negotiation tactic, or it could be a negotiation tactic, right? To try to get a better deal. Because, hey, if you're not going to negotiate with us the way we feel that you should be negotiating with us, we will simply end the negotiation, or we threaten to end the negotiation. And because that's the type of thing that could pull the bottom out from under here. And shorting would be, if you were short when that happened, it would be very fortuitous, right? But it's quite a gamble. Carlos says maybe the USD index can rally back to 95.60. Let's take a peek. Now let's take a look at the dollar index on the daily. And Carlos is looking at 95.60, which is right about here. And I can see exactly what he's talking about. There was a support here and here. Right, that could end up becoming resistance. So we just basically just slid straight down from there. Maybe a little bit of resistance in here, but for the most part, we just pretty much slid straight down from there. So we could make it back up to here. Go to the weekly too. It's more clear on the daily, but I could see that happening because of the way that we slid. We did get a pretty good report on Friday. I don't know if it's enough to turn the dollar around. We reviewed it pretty thoroughly, by the way, the non-farm payroll report from Friday. And if you missed the first session, please check the archive, because we gave it a very thorough review in the first half hour today. In my opinion, it's not enough to turn the dollar around, although it could be enough to stem the tide as far as the dollar's downtrend. It will not be enough to create an uptrend because there are simply too many part-time jobs being created, and that's just been the bugaboo for the last few years. At the bottom of that, at the heart of that is this: employers are not going to create full-time jobs, because if you create full-time jobs, you're now responsible for health care, and that's too expensive. So they're going to create part-time jobs, and that's what we're creating in the U.S. So we're now part-time. We just create part-time jobs now. So this is another thing that needs to be fixed. And so I don't think that we're necessarily going to see a big dollar rally here, but I could be wrong. One thing also about this chart, if you go way back, I'm going to go weekly here. You are into an area. Whoops. Sorry about that. You are into this area back here. Support, 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 and you're into it now. Support. So when viewed this way, we could see a dollar bounce. And if we do see a dollar bounce, we could see the euro, the pound, and other currencies sell off. And out of all those other currencies, none of them appear to be weaker right now than the pound. The pound appears to be the weakest of the bunch right now. Again, probably because of all the uncertainty surrounding this whole Brexit issue. Richard says a key aspect is that the UK electorate will not get a vote on the final settlement. again, it's, it's just as a casual observer from across the pond here, um, there's so many different aspects to this that we're just not aware of over here, you know. So, but technically speaking, you look at this chart, look at that line I just put in right here, and you can see a lot of support areas right here, 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 here too. I mean, the wick comes through, but then it turns and reverses pretty sharply. So we saw a reversal, two reversals in 2015, two reversals in 2016 from the 92, 93 area, and here we are again at the 92, 93 area on the dollar index. So if ever there was a time, I guess if ever there was a time for a reversal, now's the time, right? And so yeah, Carlos, I guess I have to agree with your analysis on this one. If it's going to bounce, this would be a good time for it to bounce. And as far as that area of resistance, we saw a little bit of resistance up here. That 95 and a half area looks like a good place for it to hit some resistance. So this could be it. Tactically speaking, I think it makes sense. Still believes the dollar is going to eventually go lower. And I already have a line there at 88.50. So I'm looking at this cluster right here. And that's from, looks like late 2014. But also 88.50 comes into play because of, it looks like 2009, 2010. So that goes way back. So Carlos is looking way back on the dollar, doing some very long-term analysis on the dollar. Looking for a bounce here. So Carlos is basically saying bounce here, resistance at 95 and a half, back down to here, eventually breaks this 92, 93 area and down to 88 and a half. That would be something. Okay, so anyway, that's about going to wrap it up. That could be very telling, though, because if the dollar does, just to get very immediate with this, if we do get a dollar bounce here, then it's not time to be buying. I mean, I'm in Euro USD because part of buying on the 10-day moving average is not thinking about these type of things and just going with the trend. But at the same time, I could hedge that and by shorting the weakest of the bunch, which to me right now looks like it could be the pound. Although, the yen might be in the running there too, but I don't know. The pound has certainly been one of the weaker ones out there right now because of all the troubles that they're having over there right now. Let's hope they get things straightened out. And I think that's going to wrap it up for the day. Richard says icky statistic 4,000 were killed in Northern Ireland from 69 up to the UN, EU, UK Good Friday settlement agreement, 1998-ish. So, in other words, having the EU come in was actually very good in terms of bringing peace to that region. And that's something that I've never even considered. You know what? It's really food for thought. The area Now, I grew up in Philadelphia, and Richard, and the part of Philadelphia where I grew up in, was very Irish, and actually, there were actually IRA fundraisers in the part of Philadelphia where I grew up. So, we'd hear quite a bit about that aspect of it when I was much younger, but we don't hear anything about it now, which is a good thing, So, and anyway, that's certainly a very positive aspect of the EU that I had not considered. Carlos says, home of the Eagles, Phillies, and Sixers. Don't forget the Flyers, my man. All right. I'm out of here, gang. But let's talk again tomorrow, okay? So many good things to speak about. And really enjoyed speaking with everybody here. And to everybody who's listening to the replays, I hope you're enjoying it as well. Lots of good information today and lots to come tomorrow. So hope you'll join us. Everybody have a wonderful day. And I'll talk to you tomorrow. This is Ed Ponsi.